Hey, it's James here, and I wanted to shoot a quick update video on this stretch situation. I want to reiterate in the beginning of this video, first of all, what I said in the last video, I still stand by. I said there is a fair chance this thing collapses. I did not say it was guaranteed to happen. I don't know because nobody knows what will happen. We do not have crystal balls. We can only look at things historically and say, this is how high yield products have behaved in the past. These are some of the risks involved, etc. So today, of course, Stretch made a new low, and it didn't just make a new low this week. It actually made a new all-time low. It fell all the way down to about $82.52 or 53 cents a share. That is nearly 18% off of the $100 mark. I called it a peg previously, and some people have said, it's not a peg, it's not a stable coin. Correct. If we're going to play pick my words apart, there is not a $100 peg. However, the idea is this is supposed to trade at $100. And when it was marketed and when it was advertised, there was a lot of talk about that. And a lot of people were led to believe that it would stay around $100 and they could sit in it safely, like it was a money market fund or like it was, a bond, and that it was going to just pay them yield. And people were told that it was, safe to put a retirement in. People were told that if they're living check to check, this is somewhere they could park those spare funds. And of course, that's absolutely not true. And it's no longer up for debate. If you're in a retirement account and you put it in this thing and you watch it fall 18%, you're in this impossible situation of, do you hold it and hope and pray that it goes back up and that you don't lose your retirement? Or do you sell and take the 10 to 15% haircut on your retirement? Those are both lose-lose scenarios. Somebody who is investing for retirement is looking for a fixed income and a safe and stable fixed income, and this asset is not it. This is a risk-on asset. That is what this is, and that's how it should have been marketed. I've seen a lot of people on social media saying that Michael Saylor is going to end up getting sued. I'm not a lawyer, so I don't know, but that would not surprise me. It seems to me that a lot of people that I refer to, maybe it's not nice, but people I call Saylor sheep, have never actually looked into Michael Saylor's history. You probably should do that if you're investing in this or strategy itself. Michael Saylor actually had a run-in with the SEC back during the dot-com bubble. They were accused of misreporting earnings, and when those earnings that were showing profits were adjusted and re-reported, it actually turned out that those profits were actually losses, and the strategy stock fell roughly 60 to 62% in a single day of trading. So Michael Saylor has a checkered past. Michael Saylor has made questionable business decisions in the past, and now he's doing it again with Bitcoin and with this strategy product. I'm not saying you can't make money with this. I have no idea what this is going to do in the future. But when I look at this chart, it is trading like a risk-on asset, and that's okay. You can make money on a risk-on asset, but you need to understand it is a risk-on asset, which means it carries the risk of collapsing. The big risk with this is somebody's going to be sitting in this thing overnight or on a weekend, and if some catalyst breaks that sends this thing lower, it may gap down 5 or 10%, and it may never repeg. It may just continue to sell off because this is basically built on consumer confidence. If people don't feel confident that it's going to move back to $100, they will not invest in it. The less people investing in it, the lower this is going to go. And eventually it becomes a death spiral or a potential death spiral where this thing could actually capitulate to zero. And people think, well, I'll just sell. It's no big deal. I'll just sell if it starts to fall. Maybe you will, and maybe you won't, because if there's not liquidity there, you can't just sell. Somebody has to be willing to buy it from you. And if nobody is willing to buy it from you, you can't sell it. The other thing that I see with this is people are acting like Saylor and Strategy has some kind of legal obligation to pay people. They do not. Strategy has no legal obligation to give you anything. They can suspend the dividends any time they feel like it. This was the ultimate play for Saylor, and you've got to give credit where credit's due. He figured out how to shear the sheep. He essentially used this instrument to raise capital, used that capital to buy Bitcoin, and he has no legal obligation to repay this capital. It is a win-win for him. Now, some people are going to say, Michael Saylor has 70 years of roadway to pay this thing off. No, he doesn't. And in fact, I loved seeing somebody point this out on social media yesterday. As this person pointed out, in November 2025, Strategy was saying we've got 71 years of dividend coverage. And now they're saying we've got 32 years of dividend coverage. So how did they lose 39 years of dividend coverage in only 7 months? And the answer is that dividend coverage is based on the price of Bitcoin, which they did say here. It's based on the price of Bitcoin. If Bitcoin starts to go down, then the runway shortens. And guess what? As Bitcoin goes down, if it goes down, it also tends to pull down Stretch with it. And it's this back and forth incestuous relationship where they're kind of feeding off of each other, kind of spiraling off of each other. And as Bitcoin goes down more and more, let's say that Stretch has to sell Bitcoin in order to cover dividends. Well, when they sold 32 Bitcoin, we saw what the market did. The market did not like that. So what happens when they have to start selling more Bitcoin? Well, it's likely to push the price of Bitcoin lower. The price of Bitcoin goes lower, it's likely to push Stretch lower. And back and forth they go. This thing can potentially go back to $100. Even though some commenters acted like I said it couldn't, I never once said that. It is absolutely possible this can go back up. And in fact, if you look at this from a pure TA standpoint, this looks like a bear trap. It is snuck below the previous level of support. It closed back on top of it, left a huge tail behind. There will be a lot of trapped sellers down here. And the most common thing that happens in markets is it moves away from trapped traders. It punishes them. It forces them to cover their position. So if you have short sellers sitting down here, or even people who simply sold that maybe now want back in, that will force buying volume, which can start to push this back up. And then it's just a matter of, do buyers, like real buying volume, start pouring back in and kind of continue that momentum back toward the $100 mark? Or does it get a dead cat bounce where this, short-term buying pressure sends it up a little bit, maybe do something like this, and then end up capitulating? And we don't know. And nobody knows. They can tell you they do. They can say they've been around. Like one commenter said, I've been in crypto for 12 years. I've heard it all. Well, guess what? I mined my first cryptocurrency in January of 2014. That was 12 and a half years ago. So if you're going to put money into Stretch, again, your business, not mine. But you'd better recognize that this is a risk-on asset and not a safe yield. If you enjoy data-driven content, hit that thumbs up, subscribe to the channel for more videos like this. Maybe share the video with a friend who needs a dose of reality. And please remember that I am just some guy sitting in a spare bedroom doing some videos for fun. Nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. Thanks for watching. I appreciate it. And as always, please remember to trade and invest safely.